took a long this morning on Eurodollar. It was a pretty much a wake up and buy kind of pattern. The main reason was price came into previous week's low. TGIF is another reason for setup. We've had multiple bearish days in a row since Monday. We've only seen bearish candles. I was predicting price to find some kind of support at previous week's low. I took some longs. Well, I took a long yesterday on Eurodollar. Got stung because I was early. I took it after price to cut this low. Somewhere around here, price hit my stop and then moved up slightly. And today, yeah, I've been waiting for that TGIF setup. And as I opened the charts this morning, I saw we had accumulation. We had a channel on the 60-minute, which was playing out, which has been playing out since yesterday. This is the channel with RSI divergence. And as I said, I saw price accumulate during just before London session, put in this strong bearish engulfing candle. Came down, took our liquidity below these lows, below the previous week's low. And yeah, I took the long just around somewhere around here. My stops at 40 somewhere. I've got around 10 pips stops. Targets could potentially go for that Asian high. However, I do believe that if we take out this high, it could pull back and then push up during New York. So I don't anticipate price to just shoot up to this high right now. But I'm not greedy. I'll be out after price takes out these highs, just in the middle of that Asian session, because we might see one more push up and then push down before we find some kind of another support during New York session. Because for pound dollar, I'm still anticipating price to come down to previous week's low. We've had a strong bearish candle. I like this candle that's printed after we've had a small accumulation of multiple bullish candles that tried to push up. And then we dropped during the GDP news. I believe we had GDP for pound dollar. It's perfect. And now I do want to see that previous week's low taken out, which also happens to be right at that daily time from inverse fair value gap. If it taps into that 50% off that inverse fair value gap, even better, right there, and find some kind of a support. And I'll be looking to trade that too. And right now, yeah, we're just doing accumulating. I would love to see price just drop down somewhere into this level, and I'll long after that. I took targets off along the way, took some off here, took half up here, and then I've left the rest of the trade run, ideally up to that Asian high, which is up with something I predict price can potentially come into these fair value gaps. So yeah, I'm going to let that trade run. It's around 0.25% of the trade run up to that high. The Eurodollar trade I've exited as price came into this fair value gap, this bearish fair value gap above this swing high. Like I said, I took positions off along the way. I took one position off, I believe somewhere around here, then another one, another here, and then I let the rest, another 2.5% run up to that high, and I took my targets off. I believe it pushed up a little bit, but overall it was around 1.6% that I gained from this trade, from this 2.77% trade, because I took multiple positions off. The total reward was 1.6%. And for pound dollar, like my prediction earlier, I'm anticipating price to continue lower one more time. I would like to see that during New York session. At the moment, I do believe we took out this low, and it's just a perfect timing for price to put in a market structure shift on the 15-minute time frame to trap in buyers into the market and take them out as liquidity, and then drop down one more time during New York session and then find support. That is the trade that I'm looking to go long on pound dollar, and let's see how it plays out. If it doesn't, that's fine. If it just pushes up, honestly, it's just what it is. But for me, I want to see price take out that low before I look for any longs. On the Eurodollar, if you look at the 4-hour time frame candle, right, where it came down to previous week's low, put in this bullish engulfing candle at the end of a channel on the 60-minute time frame on a TGIF day. It's a very good setup and potential for price to pull into the 618 or into the discount and find support and continue higher up, back up to that level. So yeah, something to keep an eye out for. See how the 11 or 10 o'clock candle closes. It might be just an order block, it might even be a bullish candle, and then we'll leave a fair value gap for price to pull into. We've already left a fair value gap right there. This could potentially be another fair value gap for price to pull into during New York session, and again, similar to pound dollar, right? Pound dollar, and like I said, I expect price to go lower one more time, and euro dollar could potentially go down, but it's got an area it can come into in discount and find support. But I'm more interested in pound dollar than I am in euro dollar. This is how euro dollar closed yesterday, Friday. Price, I was waiting for a pullback from here to around here, which was just before the New York session, and I was anticipating maybe price will pull deeper and then push up. However, we pushed up way too strongly before finding any pullbacks, and to me, we came up above these highs. Order flow is bearish, and it's not really particularly a good setup to enter towards the end of Friday. We might, push back up, take out these, or come up to this level right here next on Monday. But to me, the move has already been made, and I'm not interested in entering that trade anymore. Pound dollar pushed up a lot before coming down. I was predicting price will come down to previous week's low, where I'll take a long, but it came quite late, 10 a.m. US time, so around 3 p.m. UK time on a Friday. To me, I'm not really interested in taking that trade. This was a GDP candle, this right here during London session, London open, and it's a candle that opened and made the high and open of the candle is exactly the same, right? And that dropped during news, and price essentially got pulled back into the highs of that candle. I remember watching a video of I think Jade Cap, him talking about this candle, vortex candle, and I've noticed it a few times as well, and I would have liked to see price come down to previous week's low. Then that would have been a really good entry to go long. However, we came down, didn't take out previous week's low, pushed up, and then we came down and too late. And to me, a good entry was we came down, took out this low from the day. Previous week's low was taken out once, and entry was any time after the break of this. So could have entered somewhere around here, right? We came into that 50% off of the daily time from inverse fair value gap as well. That would have been a really good entry, and I would have had to take targets along the way because I'm not going to aim for that high during so late on a Friday. That was a really good trade. Any other day, I'm taking that trade, but because it was Friday, almost 4 p.m. UK time, I'm not taking a trade at that time. So overall, good analysis. I waited, I was patient, just didn't get my entry that I wanted. I also took a long on Kiwi on just one of my accounts because I like the way price is moving, where it is. Again, another TGIF setup. We had bearish days every single day for this whole week, essentially, except for Monday. We had price come into a major sell side liquidity. It came into this gap as well on the weekly time frame. Below that sell side liquidity, which price cleared out, or which had already cleared out, but it came and tapped into the rest of that, and that was one of the main reasons I was going long at that level. We also got RSI diverging right here, right? Essentially some channel forming. I know it's a really small channel, but we've got a channel forming at that level. On the 4 hour time frame, similarly, like we have a channel with RSI diverging from here to here, right? Can't deny the channels, especially TGIF channels. To me, it's very good pattern. And then we came down, we started to range on the 1 hour time frame multiple times. Putting this candle, to me, I really like this bearish engulfing candle that price put in after putting multiple bullish pin bars. We had a pin bar here, we had a pin bar here, followed by a bearish engulfing candle that took out the highs of the previous candle and took out the lows of the previous candle. And that's essentially price trapping buyers and then trapping sellers. To me, that's a very good sign that price could potentially hold. And then we have a range on the 15-minute time frame. We've got 1, 2, let me just do this. All right, we've got a 5 test range. Price came down, took out the lows of this Asian session, and then I took an entry right there after this pin bar hold, and I will be targeting these highs. Honestly, I can see price going up higher into some of these fair value gaps. However, it could potentially come down first before going back up to that high during New York session. So yeah, let's see how that plays out. I do expect, or I anticipate, this candle to be a bullish engulfing candle. If it is, then it gives me more confidence to hold this trade up to that high. If not, then we might see price continue lower first during Asian session, during New York session, and then continue higher. I'm still in this Kiwi trade, but only on one account because I only entered it on one account, and I'm still anticipating price to continue higher up. We didn't get the bullish engulfing candle that I was predicting that we could potentially get. but I still expect price to find some kind of support and push up. And I'm not saying it will push up now. It could push down one more time during New York session before going up. We'll see how that plays out. Kiwi price eventually broke out, right? I was looking at this small channel, but we've made it a bigger channel after that. Price eventually broke out of this range, and if you were buying at the breakout of that range, you're stung because price didn't really move up that much before dropping down. So yeah, I took the trade somewhere around down here, and I believe I exited the trade somewhere around here. It was around 0. So yeah, I think I exited somewhere around here. I reached 0.5%, and I think it was around 0.75% that I gained from the trade. Good entry, low risk, and yeah, if price came into the fair value gap like I was predicting that maybe we would clear the first one out, or price will find resistance at the first one. So I didn't really want to aim for that high, and then price continued lower, came down again to cut these lows, and could potentially find some support during Monday open, which I'll be watching out for. So because we've got a channel at quite a key level. So again, Kiwi, good trade, a good setup. Friday TGIF on a high time frame came into a key level, provided accumulation during Asian London session, took out lows multiple times, right? How many times do you want the low to be taken out? And then took a long at that low and consolidated for a while. I didn't get that bullish engulfing candle that I wanted to see, nor did I get the 3 bullish candles after this bearish engulfing candle. One was an inside bar. Price came down to cut the low off the candle and then pushed up, and then found resistance. You'd be watching that thinking, okay, we're going to come down, find support at this bullish fair value gap, and then continue higher. Then you get stung by taking along there. So that's why I like to catch the trades at the lows. I'm better at catching the trades at the low than I am at after some kind of a market structure shift, and because to me, every time a market structure shift happens, the price has already made its move, and I'm always quite late, which is what I did yesterday on TGIF setups, and I took 2 losses because of that. So I'd much rather try to catch lows and then give myself enough breathing room and then take a loss than to take market structure shift trades and maybe even take smaller wins. So yeah, those are the trades I took on Friday the 13th.